Curious about using AI for trading? In this video, we're diving into AI trading bots to find out if they're a genuine way to make money in the market. We'll explore how they work, the pros and cons, and how much you can really earn. If you want to stay ahead in the world of AI and finance, hit the like button and subscribe for more valuable insights. 1. What are AI trading bots? AI trading bots are advanced software programs that use machine learning and data analysis to make trading decisions. These bots scan market data, trends, and historical patterns to determine when to buy or sell assets. Unlike traditional bots, AI trading bots adapt and learn over time, meaning they get smarter and more accurate the longer they run. They can operate 24/7, monitoring various markets like stocks, forex, and crypto. The aim is to automate trades to capitalize on small price movements. This innovation allows even those with limited market knowledge to engage in trading. 2. How AI trading bots work. AI trading bots work by analyzing data through algorithms designed to detect profitable opportunities. They look at metrics like price trends, volume, technical indicators, and sometimes even news sentiment to predict potential market moves. Most bots rely on backtesting, which uses historical data to refine strategies before going live. Some AI bots are programmed to mimic the strategies of successful traders, learning patterns and behaviors that have proven to be effective. Once the bot identifies a favorable trade, it automatically places orders based on preset parameters. This removes emotional biases and errors that can happen in manual trading. 3. Types of AI trading bots. There are various types of AI trading bots, each serving different purposes and risk tolerances. Trend-following bots aim to profit from established market trends, buying when prices rise and selling when they fall. Arbitrage bots exploit price differences across markets, which can be highly profitable in volatile sectors like cryptocurrency. Mean reversion bots assume that prices will return to an average level, buying low and selling high. Some bots focus on news analysis, reacting to breaking news or social media sentiment. High-frequency trading bots execute numerous trades in seconds to capitalize on tiny price changes. 4. Advantages of AI trading bots. One of the biggest advantages of AI trading bots is their ability to operate 24/7 without human intervention. This allows traders to take advantage of opportunities around the clock, especially in markets like crypto, which never close. AI bots also eliminate human emotions from trading, helping to avoid impulsive decisions that can lead to losses. They provide consistent execution, carrying out trades based on logic rather than fear or greed. The use of AI also allows for advanced data analysis, enabling bots to identify subtle market signals and trends that humans might overlook. Additionally, many AI trading bots come with customizable settings, allowing users to tailor strategies to their risk tolerance. 5. Disadvantages and risks of AI trading bots. While AI trading bots offer many benefits, they also come with risks. Market conditions can change unexpectedly, and bots may not always adapt quickly enough to prevent losses. Additionally, trading bots are not foolproof and may misinterpret data, leading to incorrect trades. Another risk is that bots can magnify losses by sticking to programmed strategies, even during extreme market volatility. Poorly coded bots, or those from unreliable providers, can also lead to security risks, as they may expose your trading account to hacks. Some bots require significant setup and monitoring, making them challenging for beginners. 6. Setting up your AI trading bot. Setting up an AI trading bot involves selecting a platform, choosing a bot type, and configuring your trading parameters. Many platforms like Binance, Coinbase, and eToro offer built-in bot features, while third-party options like 3 Commas and CryptoHopper provide more flexibility. After choosing a platform, you'll need to decide on parameters such as investment amount, risk level, and trade frequency. Most bots require some initial configuration, like connecting your exchange account and setting API permissions. Advanced bots may offer customization options, allowing you to fine-tune strategies to match your goals. 7. Evaluating AI bot performance. Monitoring and evaluating the performance of your ad trading bot is essential for long-term success. Many platforms provide performance metrics, including profit and loss statements, win rates, and trade history. Regularly checking these metrics helps you determine if the bot is meeting your expectations and performing as intended. Some traders set benchmarks to evaluate success, such as aiming for a specific return on investment. It's also important to review performance during different market conditions, as bots may perform well in a bull market but struggle in a bear market. Adjusting parameters based on these insights can help improve results over time. Regularly assessing bot performance ensures that your trading strategy remains relevant and effective in dynamic markets. 8. Comparing paid versus free ad bots. There are both free and paid AI trading bots, each with its own set of features and limitations. Free bots are generally more basic, offering fewer customization options and sometimes lower accuracy. Paid bots, however, usually offer advanced features like high-frequency trading, backtesting, and customizable algorithms, making them better suited for serious traders. Some paid bots also come with support, security updates, and access to exclusive trading signals. While free bots are an excellent way to learn the basics, investing in a paid bot might be beneficial if you're aiming for higher profits. Free bots can be effective, but may lack the refinement needed for consistent profitability. The choice between free and paid bots depends on your budget, trading goals, and experience level. 9. Legal and ethical considerations. Using AI trading bots comes with legal and ethical considerations, as regulations vary widely across countries. In some regions, bots are only allowed under specific conditions, and unlicensed use could lead to legal penalties. Ethically, some bots engage in high-frequency trading, which can create market imbalances. It's essential to check the regulations in your country and ensure that your bot complies with legal standards. Additionally, ethical traders should be cautious of bots that use manipulative tactics. Ethical use of bots involves transparency and adherence to market rules. Being aware of legal and ethical issues helps traders avoid potential complications and operate responsibly. 10. Can you really make money with AI trading bots? Yes, AI trading bots can be profitable, but success largely depends on choosing the right bot, setting realistic goals, and understanding the risks. While some traders report consistent gains, others experience losses due to poor bot performance or sudden market shifts. Bots are particularly effective for those with a strong understanding of trading fundamentals, as they complement human knowledge rather than replace it. By continually adjusting and evaluating the bot, traders can potentially improve results over time. However, profits are not guaranteed, and market unpredictability remains a significant factor. With the right setup, AI trading bots can be a valuable tool for achieving steady income, but they should be viewed as part of a broader strategy, not a guaranteed income source. AI trading bots offer exciting possibilities, but aren't a magic ticket to wealth. Make sure to weigh the risks and manage your settings carefully. If you found this guide helpful, like and subscribe for more tips on using AI to boost your financial journey.